This is Spread Hunter Daily Safari for Thursday, the 4th of October. And I think the only thing we can be talking about today, and this regards the past few days, is Amazon. I took some notes on the range for this stock. The stock opened Monday higher, traded up to 2,033, which was obviously its high for the week, and closed today at almost 1911. And had traded as low as $18.99. The range for today alone was $57, and the range for the week so far is $134. And, the thing about it is that I was selling, and some of our customers were selling out-of-the-money put verticals in here that were extremely attractive 2 days ago, before the stock gave up probably almost 100 of the 134 points that it's down from that point. And the bottom line is that these spreads are more than likely going to expire worthless, but I know for a fact that people covered them and they were losing, anywhere from 10 to 30 cents on a $10 vertical that they had sold for very little money. But by the time they sold them, these spreads were 100 to 150 points away from the strike. Well, this morning, with the stock trading just around 1900, they weren't 150 points away. They were only 50 points away. So anybody who had been short them reached up and covered them and lost a little money. The other side of the equation is, if you look at the 1910 straddle today, you can see right here the calls are 12.5, the puts are 11.5. So that's, what is that, 23? That's $24. Let's say 2 days ago it was twice that price. Call it $50. Okay? The stock dropped 134 points. That means your $50 straddle, had you bought it, which very few people would have the nerve to do, went 84 points your way from top to bottom over the last 2 days, which is an unbelievable amount of move for the underlying. I can't say if the stock has bottomed or exactly really what's driving this, but there are a couple things going on, and one of them has to do with Chinese interference on the hardware side, and there's always other forces at work, but this was one of the bigger moves. 135 points in a $2,000 stock. It's like 6.5% move. That's a really big move, and when it goes, at one point today, this stock was down like 50 some points. I don't really know. So 1910, so 10, so it's 52, and that was about it. It was 52. I thought it was more like 57 at one point, but I obviously could be wrong. It's an astonishing move, and the people who sold these out-of-the-money put verticals lost a little money. The people who bought some puts of any strike at any time, these things really, really, really came to life. It's hard for me to tell you what things would have been trading or could have been trading, but I can tell you for sure is that some of these options you see here, the 1822 puts, well, that's probably a bad example. Let's go up a little bit and see if we can find something a little bit better. Well, let's just go to the 1910 puts over here that are trading $11.50. 27 points higher, that option almost tripled to $29. If we go higher than that, so we go from 1910 to 1960, $50. So from 11.5 to 50. That's a 5x move, and that's really not even half of the move we saw this week. So, and it's really hard to reconstruct in terms of time and price some of the verticals that we could have seen at the beginning of the week. But had you had any indication that there was downside in front of you in Amazon, you would have been very hard-pressed to buy any vertical at any price and lose money. That's all I'm going to say. And, good trading going forward. I'm not sure how much more there is in Amazon. It might come down, but there always seems to be one of these stocks out there with a 6.5%, 7% move in 4 days. So good luck. Thank you very much.